Good morning. Good afternoon. Good evening. Hello. Hello. Hello everyone in the world. This is ONO Chan from Hanwha, Singapore. Let me share the market information with you. As of May 19th, I'm working from home today.
Singapore government announced semi-lockdown from last Sunday. Almost nobody in the office, except for people who need to approve contracts and sign to the official documents to banks.
Let us share today's topics.
Crude oil prices fell this week on the potential of Iranian supply returning. And, as investors sold on speculation that inflation fears might lead the U.S. to raise interest rates, which might slow down economy. Brent is $67.83 per barrel. WTI is $64.64 per barrel. May 19th, 11:30 Singapore local time base. The refinery's cracking margin. We can find the unique movement this week also. Most of products got down deeper, except for gas oil. Heavy oil's drop is a kind of big. MOPS has got down a bit since last week. This means that more competition in Singapore market. Today's afternoon session was minus $12.50 per metric ton. You can guess today's market from that movement. The market would go down a lot today.
Asian market. Singapore and China are still competing. The spread between Korea and Singapore is around $65 per metric ton. Much wider compared with last week.
Market information. Let's start from first Russian market. One of big refineries' seasonal maintenance has completed. The availability of LSFO would be better from the middle of May. Please bring vessels to Hanwha.
Next, China market. We can see ample availability in most of ports. China refineries have imported more crude oil, which means more production coming from their units. There would have been enough LSFO from domestic refineries, which keep the bunker price low. China published a new regulation for the quarantine against COVID-19. We have precise details. So please send mail to us if you need ones. Hong Kong market. Actually, container liners demand is not so bad. However, the demand other commercial vessels is very thin.
Korean ports. Korean avail is basically okay. The demand is relatively low due to the high price index. The price differences between refineries are big, like $15 per metric ton.
Japanese ports. Due to some troubles in refineries, Tokyo Bay and Osaka Bay are getting tighter. Yokkaichi area HSFO is almost no avail for spotting wires.
Singapore market. This week, Singapore is really aggressive to get back some demand. Actually, the premium against MOPS 0.5% is stable, around plus $5 per metric ton.
This is Federico from New York office. In Houston, LSFO, LSMGO and HSFO all products lost ground and fell down. We heard the demand was low this week. We are waiting for your orders.
As you know, somebody hacked the biggest oil tank pipeline operator's system in US. However, the problem was solved on May 12th. And now, all clear.
Los Angeles market also got down as well in response to the lower and volatile crude complex. Avail is okay. Panama market. Panama remains good demand this week. The availability for both products and barges is getting tighter.
About shipping market. Dry bulk freight has got down sharply since last week. Around $10,000 per day drop. This is because we had a news that Chinese steel mills have reduced the operation after one steel mill was investigated by the government. VLCC spot ratio is still very low. Actually, all products tankers freight have got down after resuming the Colonial Pipeline.
Container market. Actually, container spaces are still tight. South Asian ports in countries around India have worse situation for COVID-19. Some ports set up the new regulation for quarantines and crew changes. Please check a chart on screen.
Now we're sending a mail when we update the video. However, we would stop sending. So, If you want to check the updated news, you had better subscribe this channel. We're more than happy if you do. Good button. See you next week.